It's time for another update on the best places to park your money right now, so that you can earn the highest possible return on your money. Like always, I'll be splitting this video into a few sections. The best bank accounts for those who are earning a salary, the best bank accounts for those who aren't earning a salary, the best cash management accounts, as well as the best places to park your midterm savings to lock in a fixed return over a certain period. As a bonus, I've compiled everything I've mentioned in this video into this spreadsheet. Link down below, yeah? But before I start, do join my 10,000 members Telegram chat group to discuss or ask any questions that you might have. First up, the best bank accounts for those who are earning a salary are still UOB One and OCBC 360. Between the two of them, the UOB One account is a lot more straightforward, where as long as you can credit at least $1,600 salary a month and spend $500 on either the UOB One card, UOB Ladies card, or UOB Evo, you will earn a minimum of 3% interest, all the way to an effective interest rate of 4%. The nice thing about this account is that the salary crediting criteria can be easily fulfilled by making a PayNow transfer with a transaction reference of Salah. To do this trick, you can use either DBS, Standard Chartered, UOB, and CIMB app. Set up a PayNow or fast transfer, select salary payment as the purpose of transfer, and transfer at least 1.6k over to your UOB account. Oh yeah, if you do end up using the UOB One account, make sure to check out their ongoing promotions, as they are usually easy to fulfill and can be very rewarding. Like right now, there's the Save Up and Cash In promo, which lets you earn up to $700 cash when you register by 31st December 2024, deposit at least 20k fresh funds and keep it there for 5 months. Then there's also the UOB Salary Plus promo, which will give you up to $160 when you fulfill the criteria. However, if you are unable to fulfill the UOB One credit card spend criteria due to the limited choices of eligible cards, you may want to check out the OCBC 360 account instead. That's because their criteria are all separated, and for every one that you fulfill, you get to earn more and more interest. For example, if you can credit at least 1.8k salary, you will first earn a 2% interest. Then, if you spend at least $500 on one of the eligible OCBC cards, you will earn another 0.6% interest. And if you can increase your average daily balance by at least $500 every month, there will be another 1.2% interest, bringing in a total of 3.8% interest. Oh yeah, just in case you're wondering whether the fast PayNow salary works here or not, some say that it works, while others say that it doesn't. But I guess there's no harm trying, especially when their criteria are easy to fulfill. Though, the downside of OCBC 360 accounts is that they don't have any existing user promo. But if you are new to OCBC 360, you get to enjoy bonus interest for 1 year. Quick pause. If you are looking for the cheapest way to invest, check out Interactive Brokers. It has the lowest fees for stocks, ETFs, options, and so on. Their currency exchange rates are practically the same as the one you see on Google, and they offer tons of free analysis tools to help you with your investing journey. This is the best broker, and it's the one that I'm personally using. Sign up link down below to Interactive Brokers if you are interested. Alright, let's get back to the video. So those were the two best bank accounts to use if you have a monthly salary. However, if you are someone who doesn't have a fixed monthly salary, like a retiree, a freelancer, or a stay-at-home tai-tai, your next best choice would be Mari Savings Account. Currently, this account is giving a flat 2.7% per annum, and you don't have to fulfill any requirements at all. Though, this will only last till 31st December 2024, after which it will either drop to 2.5% or they will come out with another new rate. Sign up to Mari Bank with my code and earn $10 when you either make a Shopee purchase with your Mari Savings Account, invest in Mari Invest, or make a qualifying spend on the Mari credit card by 15 January 2025. The next bank account is GSS Savings Account. By default, the main account will only give you 2.38% interest. But if you move the funds over to the savings pocket, you will get to earn a higher 2.68% interest. Then, if you can move your funds over to the Boost pocket and keep it there for 3 months, you will earn a much higher 3.18% interest upon maturity. Sign up with my code by December 31st to earn a free $5. Moving on, The CIMB Fast Saver account is very good for incremental fresh funds. That's because this account first gives a starting 1.19% interest for existing funds. Then, if you're able to top up a minimum of $5,000 fresh funds into the account by the end of December 2024, you will earn a total of 3.2% to 3.3% interest on your fresh funds. Not just that, if you are able to credit at least $1,000 salary via gyro into the account, you will earn another 0.5% interest on the first 25k. And if you are able to spend either $300 or $800 on the CIMB Visa Signature card, you earn another 1% or 1.5% bonus interest on the first 25k. Next, the HSBC Everyday Global account is rather similar to the CIMB Fast Saver account, where in this month, you'll first earn a 0.05% interest on existing funds, then earn a bonus 3% interest on incremental fresh funds. HSBC EGA will use November 2024 as the reference month. So as long as you top up fresh funds in December 2024, you are able to earn this bonus 3.05% interest in both December 2024 and January 2025. Besides that, you will also earn an additional 1% interest on your incremental average daily balance when you fulfill the Everyday Plus Rewards Program criteria, which is to deposit at least 2k into the account and make at least 5 eligible transactions, such as credit card spends, gyro bill payments, and fund transfers out to a non-HSBC account. This gives you a total of 4.05% interest on your incremental fresh funds. Though, you will need to manually send an SMS to join the money promotion, and it's only eligible if you have not participated in the previous 2 months promotion. So those were all the bank accounts that you can park your money in. If you are too lazy to move your funds around, just choose the bank accounts that give you the highest interest and you are done. But if you are a little more hardworking, here's what you can do to earn a little bit more interest. First, get your company to credit your salary into an account of your choice. For example, OCBC 360. This will let you earn anywhere between 2% to 3.8% interest. Then, since HSBC EGA is giving the highest 4.05% interest on incremental fresh funds, what you can do is transfer your funds over to HSBC EGA to earn this interest for 2 months. Then, at the end of January, transfer the money over to either CIMB Fast Saver to earn their bonus interest on fresh funds, or transfer the money back to OCBC 360 to earn the 1.2% bonus interest on fresh funds. Then in the following month, just repeat the process all over again to profit. Moving on, if you don't have a fixed salary or you want to earn higher interest, you can check out cash management accounts. The way these accounts work is by investing your money into low-risk money market funds and bond funds to give you a daily return. Though, since all these are investments and not banks, the accounts are not SDIC insured, and in extreme cases like during a huge market crash or black swan events, it is possible to see some losses. So only use this if you are comfortable with the risk. Here, I've compiled all the available cash management accounts in Singapore, what are the expected returns, as well as what were the historical max loss. For accounts that give around 2.8 to 3.1% interest, most of them have not gotten any losses for now. Then the higher return you go, the more max loss they've encountered in the past. But with so many accounts, which one should I go for? Personally, I would go for Chocolate Finance first, as they have a top-up program which lets you earn a fixed 3.6% return on your first 20k and fixed 3.2% on your next 30k. Plus, they let you instantly withdraw 20k in a day, whereas almost all of the other accounts require you to wait for a few days to get back your money. However, I also understand that some of you may not like Chocolate Finance. In that case, you can choose the accounts depending on how long you plan to park your money in there for. For example, if you are planning to just park your money in there for just a few days to a few weeks, then just go for accounts that give around 3% returns, as they have lower volatility and lower risk. Among these options, my personal favorite would be Wise Interest, as they let you withdraw up to 17k instantly every day. Otherwise, if you are planning to park for a few months to over a year, you can consider going for the 3+% to 4% options, as it should give you enough time to recover from any potential losses. These are suitable if you wish to save up for stuff like your wedding next year, home down payment 2 years later, or your holiday trip next year end. Though, one downside of these cash management accounts is that they do not lock in the returns, meaning the returns can go up and down depending on the interest rate environment. So if you are planning to lock in the returns, here are a few options that you can go for. First, you can go for SSB, which is currently giving around 2.86% 10-year average return. The nice thing about SSB is that it lets you withdraw and get back your money within a month. Pro tip, you can check out a website called I Love SSB, which lets you project next month's SSB use and calculate whether you should swap out your old SSB for a new SSB or not. If you do not need to redeem and get back your money, you can invest in T-bills to lock in the returns for 6 to 12 months or SGS bonds to lock in the rates for 2 to 50 years. Both of them are giving around 2.7 to 3% return. Otherwise, you can head over to sgft.newcities.org to look for the best FD rates. Currently, the best fixed deposit rate is by Maybank, which is giving a 3.15% return per annum over 6 months. Besides that, you can check out Stash Away Simple Guaranteed and Safe Cash Plus Guaranteed, which are giving anywhere between 2.7% to 3.1% return for an investment period of anywhere between 1 month to 12 months. Though, just take note that since they aren't banks, they are not SDIC insured. However, since they are only investing in bank fixed deposits and client funds are segregated from their accounts, there's not much risk of losing your money. The only real risk here is liquidity risk, where if they fail, it could take a while before you can get back your money. Lastly, you have Big Funder. Big Funder lets you invest in Australian real estate backed loans. It is giving 6+% return per annum for an investment period of 6 to 18 months. This return is way higher than all the previous options. Right now, they are running a year-end promotion, which will give you bonus rewards when you invest. But how risky is Big Funder? Big Funder has been operating for a few years now and has encountered 0% defaults and 0 delays so far. To safeguard your investments, there are 3 layers of protection, and if ever a deal's maturity date is extended for whatever reason, there will be a 12-month contingency period that Big Funder can use to fix any repayment issues, during which you will also earn an extra 1% interest per year. Nevertheless, the risks are still higher than all the previous options, so make sure you are fully comfortable with the risk before you invest in them, yeah? So these are some of the best places that you can park your money in. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.